the burden of proof is on the taxpayer, folks. Always. We're guilty until we prove ourselves innocent. So when they pull you over for an audit, you better be able to show this. Number 3. So this is pretty self-explanatory otherwise. The time and effort expended by the taxpayer in carrying on the activity. Do you spend 10 hours a week? Are you fully immersed? Is this your everything? Then that's going to be a big factor. I don't think we really need to go into much detail there. It's very self-explanatory. If you have another 2 jobs, does that make you automatically a hobby loss rules? I say no. You can absolutely have, even though the IRS, and if it goes to court, they try to push it as if it was, you know, the IRS is very, very strict about this. They actually say that, you know, you really shouldn't have any other jobs. We know from court cases that in appeals that they will allow for the taxpayer to have another job and still be considered business. And guess what? If you're sitting there and you're doing a side business, you'll be subject to self-employment taxes on that side business. So why wouldn't it go the other way, right? It has to work both ways. It's a two-way street, as my old mentor used to say. All right, that's number 3 for you. So hang with me tight, guys. I'm gonna try to speed through the next 6 quickly. Number 4, expectations, and I apologize for the chicken scratch, and it's expectation that assets used in activity will appreciate. Well, that's a head scratcher because, you know, if you're buying assets, they tend to depreciate. Here, we bought this right here as an asset of our business, but it went down in value. We're going to write it off. It has zero basis in the tax law's eyes. But other things that we're creating, this YouTube content goes up in value. We can sell it. Our client list, you know, our name, our brand, everything that we're creating otherwise intellectually is going to appreciate, and we can actually sell it for more down the road. So that's another great way to look at it. But yeah, some assets might also appreciate. If you're in the business of flipping homes, hopefully that'll go up in value, right? Number 5, the success of the taxpayer in carrying on. Now this is kind of related to the one that we talked about, number 2, the success of the taxpayer in carrying on other similar or dissimilar activities. All right, what the heck does that mean? That means the same thing as number 2. Do I have expertise? Have I worked in something similar before? The burden of proof is on the taxpayer, folks. Always. We're guilty until we prove ourselves innocent. So when they pull you over for an audit, you better be able to show this. Matter of fact, they'll be asking you to show this, right? And I've been to tax audits that deal with this, so I know exactly that they go literally down the line. When I showed up to the audit, I had these 9 pulled up with my client. I said, my client needs this, my client needs that, my client needs this. And that was a separate case, but yes, that's exactly what they're looking at right from the book. Number 6, the taxpayer's history of income or losses with respect to the activity. Do they want to know, have you had losses each year? All right, year after year. And in some cases, you know what's happened, guys? They've actually pulled people over into an audit because they had, like, let's say 5 years worth of losses. Upon further investigation, the client's representative pointed out in appeals that the losses were due to depreciation. The losses were paper losses, but the business was cash rich. It was actually making profits. But the depreciation from assets that it put into place in year 1 or year 2 was still carrying on those paper deductions that were not outflow for cash purposes. So the business was actually profitable, and they won the case. they proved that it was a business because it was actually making profits year after year. Just because it had assets that it placed into service in year 1 or 2, and they were depreciating it, taking it down the road, that didn't make it any less of a business, all right? So that's number 6, and that's a really great example for you guys. All right, let's jot down 7, 8, and 9 real quick. I know my partner there is already fallen asleep. She's looking everywhere but at the board, right, Ange? 20 minutes, yep. Well, it ain't easy making a living, is it? The amount of occasional, and by the way, Angie, you owe us the cryptocurrency, occasional, yes ma'am, profits, if any, which are earned. All right, the amount of occasional profits if any, which they are earned. You know, honestly, I don't even know what that means. And shame on me, because that just doesn't make any sense. All right, but it's there. Can you interpret that for us, Angie?
Oh, sure.
Yeah?
Sure I can.
Yeah, go ahead.
So they wanted to see, well, maybe you're losing money, but sometimes you're making money. So that could be one of the factors where, hey, we're just occasionally making profit, but at times, like there's still hope for us. At times we are profitable and we're hoping to increase that. That's how I would read that.
Number 7. So say it again, Ange, so everybody can hear.
Everybody can already hear.
You sure?
There's hope for you.
There's hope for us.
Sometimes making money.
All right.
You're sometimes profitable.
You're sometimes profitable. Okay, so out of 5 years, you might not have made like 3 years.
Perhaps you had, maybe the most recent year has been profitable, and the year before then, first half of the year was bad, but the second half of the year, you've kind of turned around. So you have some occasional profit, but they just were maybe unanticipated events that caused losses in those other years. Right.
So they look at everything. Again, it's never just one thing. They look at everything, even within that certain specific situation or variable, right? Factor. The financial status of the taxpayer. Well, I guess they want to look at, is the taxpayer pouring everything into this business? Is it like, are they living off of this business, or are they, you know what I mean? So in other words, is this their only bread and butter? Do you have another source of income? Are you living off of your pension? What's the story there? So if your financial status is this has to be it, this is everything I got, then it's more of a profit motive, because then you're really invested in this. This has to work, otherwise you're going to go bankrupt. So that's kind of like us here. You know, we have nothing else going on. We're relying on you guys out there in YouTube land to help us out and keep our channel and business going. Otherwise, it's this or I'm flipping burgers. I don't know how to do anything else. I have absolutely no other skills. This is what we went to school to do, and this is what we've been doing ever since we got out of school. Remember that when you hire your next accountant. That's the kind of people you want working for you. All right, elements. Last but not least, elements of personal pleasure and recreation. All right, that comes back, or recreation. Am I right? I don't enjoy accounting. No, I'm just kidding. If I'm breeding horses, I better not be getting on those horses and riding along and showing any kind of pleasure or recreation with those horses, because then it could be easily seen as a hobby. All right, it should be, like the people that are riding and taking care of the horses are only the people that are invested in that business to do so. I might have my own separate horse barn if I was a rich accountant somewhere, and that would be the time I would do my own recreation. I wouldn't keep it, hey Nitro, come here. You want to say hi to everybody in YouTube land? Come here. This is our hobby lost dog. This is the only time we have actual recreation and fun at our office.
A race dog.
A race dog. There we go. So that's number 9. All right, folks. How does it work in appeals? Well, if you go to appeals, and okay, let me backtrack. So if they pull you over into an audit, and you can't satisfy all of these 9 variables, and the auditor is just giving it a hard time, then you basically will lose your case. They're gonna fork you a bill for all those losses that you took year after year for up to 3 years, from my understanding. And then basically you're gonna owe them money plus penalties and interest. Wow, that sounds like a lot of fun, don't it? What do you do then? Well, then you can take it to appeals. Now, what happens if you get to appeals and then you can show 5 out of 9 well, then the appeals court will actually give you 5/9. That's right, the appeals court will give you 5/9 of your losses. And it'll allow 5/9 of your losses. Well, is it a hobby or is it a business? Which one is it? Can't be both, right? Well, that's not how the appeals court sees it. The appeals court will actually give you some sort of prorated amount, which sounds bizarre. Now, if you ever pulled into an audit, the IRS auditor will tell you something along the lines that this will not fly in any appeals court, that most appeals court cases don't make it. That's not necessarily true. Everything is facts and circumstances. So sometimes it may be worth getting that team involved that understands something as complex as appeals court and can challenge it and win and prove that they are in fact in business and not in it for the hobby. So that's basically the appeals court, and that's how that would typically work. It's not an easy process to go through, but it's definitely something many have sought and have won. Now, what do you do if you don't want to deal with any of this? Then what you can do is obviously you can incorporate into an S or C, into an LLC. But the other option is to set up a C corporation, and then you can actually put as much money as you want into this business, and the losses will carry over into the future, and your C corporation will be able to deduct those losses at some point in time, and this will avoid any kind of scrutiny. Why? Because a C corporation is not tied into anybody's personal taxes at all, and it's just a separate entity altogether. It's not like an S corporation that's still tied into you, because an S corporation is a pass-through entity. It's not a LLC taxed as a partnership or a Schedule C or a sole proprietor. It is a C corporation is a completely separate entity that is not tied into you only by ownership. That's the only thing that it has. And remember, C corporations are double taxed. So that's why if the C corporation starts to earn money in year 4 or 5, it'll have those losses passing through from the prior years that will offset that C corp profit. And if your LLC is taxed as a C corp, you can always get rid of that C corporation status and revert it back to tax. Remember, an LLC is it can be taxed many different ways. It's a one size fits all type of entity. An LLC can convert to an S corp, and then it can convert back to an LLC for tax purposes, then it can convert to a C corp and can convert back. That's the beauty of an LLC. Again, more reasons to do an LLC as your first entity choice. All right, this is Greg Freyman, Frame CPA. If you guys have any questions out there, always feel free to reach out to us. We're here making sure that the accounting law is as easily digestible to you as possible. It's not easy stuff, and believe me, I'm already condensing it into a very quick segment. There's a lot more to this than what I've covered here, obviously, and it's all case by case. So again, if you have any questions, feel free to reach out. If you like our content, give us a thumbs up. We'd love to hear your feedback. If you have any suggestions or ideas of what you'd like to see in the future, just please drop us a comment down below, and we'll make sure to put something out there for you. Otherwise, that's it, all from here, from Freyman CPA in Jacksonville. Remember, your success is our success all day, every day. Thank you for joining. Have a great day.